Awesome. So from our last video, we were talking about making offers and assuming VA loans. We now have the next stage of what's going on. Cedric's with us, and thanks, Cody, for joining us too. We're going to look at the next stage of our process of assuming a VA loan, some of the trials and tribulations, some of those things that the everyday agent may not know, and also the consumer is experiencing some of these things along the way where they don't know the answers and they don't know what to expect. They don't know the rules. So they can't, push back on some of the decisions. But Cody, you've been working with Cedric now for a couple of weeks. You came across a property. We were talking in our last video with Cedric about making an offer. The offer was made. The offer was accepted. Is that right?
That's correct, Tristan. Yeah, and thanks for having me, by the way.
You're welcome.
hmm
So
Yeah, so
congratulations, Cedric. You got an offer accepted to assume.
yeah.
Yes, I did. Very excited.
So what's the next stage from here? Obviously, we got an addendum or some sort of documentation in the contract that says we're planning on buying the house, assuming the loan. That's a little bit different from most contracts, but it's a standard field, I believe, in the contract. There might be a separate addendum to provide more info. Give us a little bit of clarity on that, Cody.
Yeah, so kind of covering the writing an offer to, actually closing on it. Assumptions are totally different than new financing. So how we write the contract and how we did it for Cedric's, lenders don't really pay attention to any timelines in a contract, unlike new financing.
Right.
So in terms of closing, typically it's 60 to 90 days, or as much as 120, depending on who you get for a servicer.
Yeah.
So what's really important, like what me and Cedric did, is we have a variable closing date. So it states in our contract, if we don't close by X date, contract automatically extends to X date, and it does that 2 more times out to 90 days.
Great.
Reason being that we do that too is, I was running into the issue of every time we needed an extension, even though the sellers up front were educated on what this process looks like,
Yeah.
they're trying to renegotiate, which
Yeah.
I don't like for my clients. So
Yeah.
it's kind of
is there a way that we could put in there that we will close within 30 days of the completion of the assumption? Is that a reasonable thing to place? Because it leaves it very generic. It does give a date based on an event happening. And obviously, if you really can't assume, then you're not in contract. You're not bound to complete the contract because the seller's lender hasn't complied or hasn't been able to underwrite. Is that something you could do to that way not have to put out 3 90-day or 3 30-day extension points just to say within 30 days of completion of probate, I'll buy the house? And that's something I generally do in those situations. Do you think that could apply here?
At least what I've been told, it's much easier to enforce a date. If it does not close by X, it automatically extends to X date.
Yeah.
Versus leaving it open, it's very open to interpretation.
Got it.
So
fantastic. So you got the offer accepted by the seller's agent. Now, what have you collected from Cedric in general? What is the first stage of your collection? I mentioned yesterday we'd probably want a mortgage statement from the seller just so we got the full details of the mortgage, the principal balance, the interest rate, the account number, so we can put that on the assumption form. I'm guessing we know who the loan servicer is. Tell us about what's collected now, and what's going to be leading forward the next 2, 3, 5, 8 weeks through the process. You providing more information to the lender.
Yeah. So actually, I do it a little bit different than probably most agents. So I pull together, estimated cash to close, estimated remaining loan balance, estimated interest rate. This one, we know the interest rate and we do know the loan balance, but we make the offer typically based on estimated information. And then from there, we're filling out the loan assumption addendum and everything after. And it's written in, Section 8 that I'm filling that out and not the seller's agent, because there's some important details on there.
Yeah.
So it's a little bit of a different process. So on Cedric's, we know what the terms are, but I don't have the mortgage statement in hand yet because I'm waiting on it from the listing agent, but we should have that later today.
Got it. Okay.
So
once you have that, you can complete the addendum. That goes to the seller to to countersign as well, comes
Yep.
back to Cedric, then is that what gives you the third party authorization to talk to the lender at that point, or is that just from you filling out the form that they counter? Tell me about what happens then.
Yeah, there actually is a separate third-party authorization form. Now, like for Cedric, he already got pre-qualified up front with a third-party assumption company.
Yeah.
So they handled that piece for him and the sellers. So that's not paperwork like me as an agent I personally touch, nor
Great.
do you really want me messing with because that's not my area of expertise.
Yeah.
So
Got it. So what can Cedric expect from this point onwards? Get the mortgage statement, get those couple of forms filled out. What is typical in the process and the processing now from now till whether it's 90, 180 days? Hopefully it's not anywhere near 90, but between now and getting to that closing table. Because really the process is Cedric's applying for a 3.5% loan effectively. He's got to qualify with his income ratio for a 3.5% loan instead of a 7% loan. So it's a lot easier for him to qualify for that interest rate and that payment. Obviously, it's pretty standard on what you would apply for a brand new loan, but you're just qualifying for a lower payment effectively with the remainder of a term on an existing mortgage.
Correct. Yeah, in terms of kind of what you can expect, it does vary per lender, but yeah, that 60 to 90 days, you're going to be working, with the loan servicer that holds that mortgage, and then like in Cedric's case, working with a third party assumption company, they kind of underwrite his file ahead of time, request all the documents that they're going to need, and put together that whole assumption package for the loan servicer.
Right.
So
that sounds very worthwhile. And how many people are using that assumption type of company to do this? Very few, I'm guessing.
No, you'd be surprised. Like at one given time, they're typically carrying anywhere from 60 to 80 files. Yeah, 14 of them are mine for clients.
Is that an Arizona-based company or is that nationwide?
Arizona-based, but they do nationwide.
Got it.
So a lot of South Carolina, a lot of Texas. Obviously, because we're based here, a lot of Arizona.
Yeah.
Is that new, or is it becoming more popular now, or has they been doing assumption for the last 5-10 years?
So, mortgage rates have been on a downward trajectory, since the 80s for the most part. So there really has not been a place in the market for assumptions. It's only now that, we had rates in the 2 to 3 to 4% range, and we're now at 7-8%, that an assumption becomes attractive. Like when rates were low, what would be the point of doing an assumption? You might as well just, get the exact loan terms you want because rates are low. So.
And there were incentives at those points with buy downs because of the state of the market. People were attracting you with the lending company buying down rates for you instead of you having to buy some of those rates down, I guess. So that was also made it more attractive to get an extra 1/8 or 1/4 of a point off the rate just from working with your lender directly, I'm guessing.
Yep.
So traditional processes generally in place outside of the assumption. So you're going to have a due diligence period. How long is that in this situation? Do you get longer because it's an assumption, or is it again 10, 20 days? How are you?
No, it's typically 10 days is what we're doing on everything.
So you're just send your inspector in and getting a report done, and will you do any pushback at that point, depending on what you find?
What's that?
Will you give any BINSR and request for repairs and negotiate at all at that point?
Yeah, I mean, we always try. I mean, the way the contract's written, the worst thing they can say is no, and then you still have the right to move forward with it.
Yeah.
And then I think where a lot of the opportunity comes with an assumption is it's kind of a new thing. So who knows if you have an agent on the other side that knows the value of it? Because I'll tell you, like, if we're looking at a house that's sub 20% down with, a 2 to 3% interest rate, you're going to have flexibility on inspection, or at least you should. But some people don't know the value of it. So it doesn't mean you can't negotiate, see what you can try and get off.
Yeah.
So,
Yeah. I think it's an amazing opportunity.
mhm.
Certainly, you're scouring the market for listings that are certain loan types. How is this something you're educating other agents on, or is this something that just doesn't make sense to do that, and you're just looking for that niche to
Um,
benefit from the rates that are available?
yeah, so previously I was not educating agents on it. I think I probably had kind of a scarcity mindset towards it, if I'm
Yeah.
being honest.
Mm.
But I mean, I personally, I hit a point probably about 3 weeks ago where I stopped prospecting, like how I met Cedric on Facebook and stuff like that. I stopped doing that because I had enough clients personally that I didn't need to. And now, with my business partners, we're starting a small boutique brokerage around it,
Nice.
specializing in loan assumptions. So,
Fantastic. So are
mhm.
you looking to go and find target properties and then sell to investors that have a partner that could, qualify for those loans and hold them as investment, or are you specifically looking at the retail market?
So both, I work with a lot of investors, just strictly because like if I'm talking to you, Tristan, or you, Cedric, I don't need to sit here and explain why a 2 to 3% interest rate is a huge benefit, especially
Yeah.
in today's market. So obviously investors are attracted to that. But we also, I just closed one today for some primary home buyers. So we do that too. It's really just for anybody that's in the position to take advantage of it that sees the value in an assumption.
Fantastic.
So,
Fantastic.
which, if you ask me, I think anybody that gets educated on it, you know, um, has interest in assumptions typically.
Yeah, absolutely. No doubt.
Hmm.
Cedric, what else are you aware of, and what questions did you have the last day or two with Cody?
Was my what I have been aware, and what other question I had really has been of, okay, how do I do more? How do I buy more? How, once we close on this, how can an investor can go ahead and buy more property, because there are some loans that do not allow for investment. Uh, so those were the question I had, and Cody, do you wanna elaborate a little bit on that as we speak about it a little bit today? How can an investor go on and buy more property like this as an investment property?
Hmm. Yeah, that's a great question, Cedric. So, how the tough thing about doing VA assumptions is we can't use any of the rental income to offset mortgage payments or debts until it's 2 years filed on the tax returns. So, like, if you're buying a house today, it would have to be on your taxes filed 2 years to be able to use the rental income to cancel out that payment.
Mm.
So typically everybody has a cap. Let's say it's 45, 50% DTI on VA. Whatever you can carry for, you know, uh, debt repayment on a monthly basis, that's going to dictate how many properties you can buy. So, like, when we're pre-qualifying somebody, we're not pre-qualifying like on the price of house. We're pre-qualifying on what can someone handle monthly payment wise. So, like, if someone qualifies for, let's say, $5,000 a month, they could probably buy 2 to 3 houses.
Yeah. So what types of loans are generally assumable? What are you seeing out there? I think
Mhm.
there could be, as long as it's in the loan document, that it's assumable, but VA, I think almost all VA loans are assumable since a certain date. How many FHA loans and conventionals are generally assumable? Is
Mhm.
that quite a common thing?
Yeah, so all VA and all FHA, even if the servicer tries to say it's not assumable, that's false. Every
Right.
VA and every FHA is assumable. Conventional, it's at the discretion of the servicer, and it's very rare because why would they want to, let somebody take over a 2 to 3% mortgage if they have the option not to?
Right. Yeah. Understood.
So,
So that makes a lot of sense. But really, a government-backed loan is a safer assumption opportunity for the loan servicer. Is that where we're looking here, or is there
yeah,
a different
and
reason?
it's guaranteed as well. So, you know, if you find something with a VA, there's no question of, you know, is it assumable? It is.
Yeah, absolutely. Well, fantastic. So what should we be looking at finding out in our next call? We'll probably do another call in maybe a couple of weeks or 3 or 4 weeks when we have some more information. And like you said, Cody, I think we should probably do a call where we talk about how do we find these properties? What are we doing to locate this type of opportunity? And, you know, how do we talk to the agents? How do we talk to the sellers if we're direct to seller, and see if we can just assume that debt? And I think for investors, even talking directly to a seller, if they're talking direct to a seller, they won't do a sub two. But hey, how about we assume the loan? Because, you know, certain people
Yeah.
are saying, "Oh, we don't want to assume debt," but it sounds like that's a pretty good idea right now. If we can find a partner who will qualify for the debt, taking over 2.5%, 3% without the threat of due on sale and a number of other concerns that are coming up from subject to and other creative finance things, it seems like a winner.
I'll tell you, you guys make my job really tough because I often get confused with sub two and creative finance.
Yeah.
And it's talking them back. It's like, hey, no, this is something different. And, you know, there is a place in the market for sub two, just like there's a place in the market for loan assumptions. But yeah, they don't go hand in hand.
And,
you know,
and
that seller.
I can imagine it's really talking to the seller and saying, look, sub two is for a distressed seller. You're clearly not a distressed seller. And I think it's a great opportunity for you to sell your house at a higher price.
Yep.
Not have to give concessions for closing costs because the interest rate is already down. So there's your win as the seller. And now you get to take more with you to your next property. And hey,
yeah, exactly.
Guess what? If I can find you a loan to assume on your next property, how about I find you a 3.5%, 4% interest rate deal to move into, and we can get that one assumed? Would that be a better future for you? Because then we're offering that same benefit to the seller as well as the buyer that's assuming the rate, presumably.
Yeah. Yep, I'm doing one like that right now. Primary home seller. We're actually selling on an assumption, and then it'll be buying on an assumption.
Fantastic. Well, brilliant, guys. Thank you for filling us in on this. I think it's been amazing to, you know, watch this journey and see how it evolves, and we'll learn more in the next few weeks, and we'll keep documenting it all the way through. So, Cedric, thank you so much. Cody, appreciate your expertise.
Yeah.
We'll continue the conversation soon.
All right, sounds excellent. You guys have a good evening.
Thank you for having us. It's amazing.
Yeah, thank you, Tristan.
Thank you. Remember to subscribe and see more great content. Thanks for watching.